All right, moving on. It is time for the regular portfolio segment in which viewers of this channel come on to chat with me about their portfolios, their investing philosophy, and whatnot. These are no experts, okay? They're just regular folks like you and me thinking out loud about their portfolios, kind of like what you do to your wife, but without you having to sleep on the doormat afterwards. And there's also the benefit that I don't roll my eyes at my conversation partners. So yeah, the invitation is open for anybody and everybody who wants to chat about their portfolio, talk to me, record it, put it on YouTube. So you can send me an email at antonio@resourcestocks.com or DM me on Twitter or whatever works. All right, this week I spoke to Pedro. Pedro is a Portuguese retail investor who works as a software engineer currently in the energy industry, and he's got a smile that might make you forget what he's talking about in the first place. He also has a much different approach to investing than most of us. I suspect his approach is much better than mine, and he's going after less risk and appreciates dividend-paying natural resource companies, for example. But he also told me that he does not own any uranium stocks. So, well, that warranted a few questions again. Let's play that clip on here. All right, Pedro, I'm looking forward to doing this with you. So, first of all, thank you for being here. I appreciate your time, and tell us a little bit about yourself.
Pleasure being here, Antonio. So I'm Pedro. I can give you a little bit of my background. My background is in engineering, software engineering. That's where I did my bachelor degree. After that, I advanced a little bit more. I did some masters in management and more recently an MBA. An MBA which was actually focused on the energy sector. It's called Global Energy MBA, and it kind of led me into the energy worlds, into the resource worlds, and so forth and so on. So on a day-to-day basis, I work for a big American multinational, energy related, but more on the system side, so software for big utilities around the world. That's my area of expertise. On the side, I do a little bit of investigation, financial analysis in order to support my personal investments. I've been doing that for about 4 years now, the analysis. And about 2 years ago, I've actually decided to jump in and commit some of the money based on my analysis. So I've been investing in some companies over the last 2 years, namely on the energy sector and on the material sector.
Okay, very cool. We're going to talk about those investments here in a second. What do you have to be good at so that you can be good at your job? Like what skills do you have to be good at?
So I'm on the sales side, so personal relationship is definitely a must, and then a good understanding and good knowledge of the industry, which in my case is the energy industry, more specifically the utility.
Mm-hmm. What are you seeing in energy right now? What is something that you're obviously seeing and it bothers you?
I see a lot of more recently with the Russian invasion of Ukraine and with the energy crisis around the world, it seems that energy kind of took a well-deserved place in the news. So everyone talks about energy. Everyone has something to say about energy, and there is what I see globally is a trend to push these decarbonization, renewables, which I fully support. But most of the times, people that are making decisions, they don't seem to really understand the industry, and they don't seem to understand how much the economy and our lifestyle depends on some types of energy that it seems that they want to get rid of.
In doing so, in your 9-to-5 job, are you able to use some of the skills that you've learned there to sort of translate them to your portfolio?
Not really. As I mentioned, I mostly work in a very, very narrow area of the energy industry. building and delivering and selling, which is my function, a very specific system for utilities. So I really don't use my 9 to 5 job expertise or knowledge in my investment portfolio, in my analysis. What I do use is what I've learned over the years, what I've learned in the MBA that I've done, and just out of reading, I'm very curious about the financial sector. I'm very curious about financial analysis. Bought a few books, read a few books about the subject, and then I've tried to put all the pieces together, and I kind of created a model that I think it's kind of working for me.
I like how you said you bought a few books and then you read a few books, because those two things are not always the same thing. Because I can tell you from personal experience, I would buy books and I would not read them.
I've read.
Yeah. What percentage of your? I guess you're using your day job. You're mostly using it sort of as a cash cow, where you have cash coming in, and then you're gonna reinvest that money. What percentage of your income do you put into your investments every month?
I try to set aside 10% of my income every month into a specific account for investment. Truth be told, that I'm currently sitting on a chunk of cash that I haven't allocated yet, right? So I have allocated about 30% of the pot I have specifically for investing. I have not allocated the majority of the cash yet.
Why is that?
I think kind of agree with Lobo Tigre in that probably they're still, even though lately he says that he's starting to allocate some money and buying some stocks, I think I'm a little bit more cautious, and I think that we've not yet seen the bottom of the markets. And I think companies in the space that I like to invest, which is energy and materials, are still going to go down, right? So I'm kind of waiting for a better opportunity. Okay. I'm not saying that's the right thing to do. I'm just possibly not. Disclaimer: don't take anything that I say for as truth. But I still think that we have not yet hit the bottom.
Okay, fair enough. And come time to deploy your capital, would you be mostly putting that money in natural resources, or are you going to be diversifying it into, I don't know, blue chip dividend payers or something along those lines?
No, it's going to be primarily in energy or basic materials.
Okay.
I'm looking very carefully at steel today. Well, not today, over the last few months. I mean, steel companies are just bargains, right? PEs of 5, PEs of 1, PEs of 3s. I've not yet taken the risk and the decision to actually buy some stocks in that area, in the steel area, because of the economic downturn. But there's some companies out there, exceptionally good managed, well managed, and with very good cash flows, and with PEs of 3 and 4.
So the stocks that you still have left in your portfolio, that's all natural resources as well. What sectors have you kept?
Mainly on the iron ore, gold, and a little bit of rare earth.
Oh, so no uranium in there?
Sorry, no uranium.
Okay.
No.
You must be the first person on the regular portfolios who's not holding any uranium. Why is that?
So I follow your channel, as you know. So I know uranium is close to your heart. It's the technology that energy production via nuclear power plants. It's something that I fully support. I wish we had it here where I live in Portugal. We don't. So I definitely believe that that's the way of the future, so to say. I don't know enough about the sector to invest. I think it's very, very specific. I've tried to read even some of your material, reading the what's the right word? Reading the or understanding the life cycle of the entire uranium energy sector. But I'm still struggling. So I don't have the confidence to invest in a sector that I don't know well enough.
Let's put it that way then. This is sort of the gun to your head scenario question. I ask everybody this question. If you had to sell everything and only hold 3 stocks for the rest of this commodity bull cycle, but you had to allocate it right now 100%, what would you buy? Which 3 stocks?
Which ones would I buy? I would probably buy Rio Tinto.
Nice.
Fantastic company, high dividends, very well managed, very stable, pretty much no debt. They have cash. They have the expertise. I mean, they've been purchasing other companies. I think they were trying to acquire a company in Canada, if I'm not mistaken, in the copper sector. So I just love that company. That's definitely one of the ones I would keep, and I'll actually buy probably even more.
Rio Tinto pays a 12.5% dividend, by the way.
Yes.
I just checked it. It's incredible.
It's a cash cow. Yeah.
It's an absolute cash cow. Don't you think it is fully valued, though? I mean, it's sitting at almost $140 billion. Everybody who would ever like to invest in this stock has access to it. So it's not some obscure company. So is there still a lot of growth there?
I'm not sure if there is still a lot of growth. I think if you're looking solely at the stock price, you might see it come down over the next couple of years because their main business is iron ore, right? And if we are going in through an economic downturn, I think you will see that affecting companies like Rio Tinto because, as I mentioned before, steel companies are coming down. The reason for that is that the market is foreseeing extremely low demand in terms of constructions, in terms of steel, and subsequently iron ore. So yes, if you're looking at solely the stock price, you may see it coming down. However, I believe that in the future, if you're looking at a 10-year horizon, I think Rio Tinto is highly undervalued as it is today. It's a company that today is trading at a PE of 5, not 15, not 12, not 10, 5. Right.
I stand corrected, by the way. It's 140 Australian dollars, so that put it at 90 American. I was looking at it right now. Okay, yeah. 12.5% dividend. It is definitely interesting. What's next? What other companies you got?
So the other one I would keep and I would buy more from would be Sibanye-Stillwater. So that's a South African company, also in the material sector. A couple of years ago, they decided to invest heavily into rare earth metals. And so they were primarily a gold company, one of the big ones in Africa. And then a few years back, with new management, they've decided to kind of expand globally. They've been buying mines in South America, I believe also North America, and they are exploring other the minerals.
Mm.
So yeah, again, what I do with these companies is that I go back, analyze their performance over the last 10 years. I try to build a view of what the company has been, how the company has been progressing in terms of revenue, in terms of cash flow over the last 10 years. And then I try to project the revenue over the next 5 to 6 years. So do valuation analysis, discounted cash flow analysis, basically. And I come up with a target price, and I base my decisions on that price. So as it stands today, Stillwater is trading at a PE of 6. Okay, dividend yield is about 10 to 11%. So again, a cash cow.
Yeah, I'm looking at it. Enterprise value to EBITDA 2 times EBITDA when you account for debt as well.
Yeah, very low debts. Yeah, sitting on cash. Good company.
20% levered free cash flow yield. This sounds like a good business. What else? What's the third one? I like your approach.
The third one is Southern Copper Corporation. ticker is SCCO. Mainly on the copper space. I think it's probably one of the largest. Well, I think it's the largest private copper company in the world. This one is not that cheap because not that cheap. It's trading at a PE of 12. Dividend yields not that high. It's around 3%.
I stand corrected. It's 6.5%.
6.5%.
So that's not low. I mean, if you look at what you'd be getting from something like Apple, what is it, 2% tops after the crash?
So again, very well managed, very low levels of debt, lots of cash. Largest private copper major in the world. And although it's not as cheap as Rio Tinto and Stillwater, I mean it's my bet on copper. We all know that there is a global drive for renewables. The more we want to do renewables, the more copper we will need for EVs, for wind turbines. Everything that is renewable requires 3 times more copper than fossil fuel economy. So that's my bet. This one. I don't have that many stocks. I'm hoping that the market still goes down a little bit and I can get this company at PE 10. If it goes to PE 10, I'll buy it every single day.
I wanted to sort of close it off with one last question, because you're a lot more conservative than most people that I've been speaking to here. So I like that. I'm very interested in that. What is your one advice for younger investors? What would you tell yourself if you could go back to when you were 27?
Do your homework. Define a strategy and a plan and stick with it until someone is able to convince you that they have a better strategy. Just stick with it. I think that's the most important, for you to have a strategy. There are people that, how can I say this? I mean, there's multiple strategies to be successful in investing, right? Some people like to speculate. Some people are very good at getting that sense of when the market is going down, when the market is going up, and they're very good at that. There are people that are more analytic, like me, who like to study the numbers, create graphs, see tendencies, and so forth and so on, and then invest only when they are, sure that that's a good bet. whatever the strategy you define, just go with it. Don't jump from strategy to strategy. Just do your homework, learn, study, define a strategy, and stick with it for an amount of time.
That's